What is up, you guys? Nick here. Well, this is my 100th video and I wanted to make it a special one. And there is no other company I would rather be talking about than one of my all-time favorites, NIO. This video is going to be about why NIO will win. I first started investing in this company at $3 a share and first told my subscribers to invest in this company at $7 a share, and what a wild ride it has been. In this video, I will be breaking down analytically why NIO will win long run. NIO to the moon, baby. Investors really aren't sure whether to buy, sell, hold, buy on dips, swing trade, or avoid the stock at all costs. And Wall Street has very similar sentiments, with low price targets in the 20s and high price targets in the 300s and 400s. People have very partisan views on NIO. You either love them or hate them. And I am definitely in the love column. And in this video, I want to talk about why they're going to dominate the future landscape. We have a lot to get to in this video. But first, Webull is offering 4 free stocks worth up to $3,700. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This is such a no-brainer, guys. Webull offers some of the best analytics in the game. I'm not just saying that. I wouldn't promote any company I don't believe in myself. They are a 0% commissions trading platform. This promo ends very soon. Don't sleep on it. If you haven't already, make sure to hit that subscribe button. I would really appreciate it. It's my 100th video, for crying out loud. I am here for you guys. I'm sure you guys all know that by now. I cover NIO all the time, EV, tech, and focus my investment strategy on innovative disruption. Decimate that like button while you're at it. Enough blabber, let's get right into the video. All right, so NIO, if you somehow didn't already know, is an electric vehicle startup company based out of Hebei province, China. Founded in 2014 and headquartered in Shanghai, China, with global offices, NIO is using a joint partnership outsourcing model with affiliate JAC Motors to design, build, manufacture, and distribute beautiful, sleek, some of the coolest vehicles I've ever seen in my entire life. Do not tell me that's not a beautiful car. Their billionaire, forward-thinking, entrepreneurial founder, Li Bin, is aggressively making moves that some thought impossible just a few years ago. The way NIO operates is quite unusual and unorthodox. And in today's day and age, in this aggressively fierce EV environment, unusual is virtually the only way to go. NIO sets itself apart by what I think will be the driving force for its continued success: swappable batteries. They took a huge, and I mean a huge, risk up front by utilizing this technology. This was an idea that big names like Tesla toyed with early on in their company's life, however disregarded it, basically saying it wouldn't be feasible building the infrastructure around this. Well, over a decade passed, technology advanced, and enter NIO. NIO has thus far implemented over 150 of these battery swapping stations scattered around mainland China in strategic locations and have no plans of slowing down soon. Now, a NIO user can simply drive into one of these swapping stations and under 3 minutes drive out with a completely charged battery. This is far faster than conventional charging times at a traditional plug-in station. This is also completely mitigating the growing concern of EV users of long lines at charging stations. There have been viral videos around YouTube of EV users sometimes waiting up to hours just to get a charge due to few supercharging battery stations and long wait times. NIO has completely gone around this issue with swappable batteries, and it's proving incredible for both their brand recognition and their bottom line. They have now completed over 1 million battery swaps thus far, with NIO receiving, charge by charge, a small percentage of every single swap. As the number of NIOs on this road, this small number will begin quietly growing and building and becoming louder until it really is padding and contributing large quantities of revenue to its bottom line. Although building these battery charging station infrastructures early on was a huge risk for NIO, these essentially are paying for themselves as time moves on. There is speculation that future EV makers adopting this battery swapping model will fit their makes to be compatible with NIO charging stations. NIO would then be able to pay a premium on this getting a charge percentage every single time a swap occurred. Now, this battery swapping model extends perhaps maybe further than you may think. The Chinese government has unfortunately recently pulled funding to subsidy programs incentivizing consumers to turn towards clean energy. The Chinese Finance Ministry has stated that China will cut subsidy programs by 20% in new luxury electric vehicles in 2021 and 30% in 2022. A devastating blow for the EV industry at large, and especially those new, young, emerging electric vehicle companies. These companies are just trying to get a foothold, and this is wiping out possibilities. As you may know, NIOs, being more than 300,000 renminbi, are classified as luxury electric vehicles. But, and this is a big but, the subsidy cut will not apply to NIO. This is extremely important. NIO, having a swappable battery, continues to be eligible for the subsidy program until at least the end of 2022. The Chinese government and authorities have stated that the subsidy program will continue applying for companies with swappable rechargeable batteries, even if they are a luxury premium brand. Now, what you may or may not know is the Chinese government actually has backing and stake within NIO. They have formed a subsidiary company termed NIO China. Therefore, one might say the Chinese government is incentivized towards NIO's success. Now, I'm not one for conspiracies, and I would never say the Chinese government is incentivizing and favoring a domestic product while squandering a non-domestic product, international product like Tesla. But all I'm saying is sometimes it helps to have friends in high places. This extra 2 years advantage that NIO will have over its competitors in legislation, in inked-in deal, will be huge for this company moving forward. Now, shifting gears, that's a pun. Let's think about the most cost-heavy proportional value of a car. For a traditional vehicle, it's typically the engine, and for an electric vehicle, it's typically the battery. Although battery costs have been declining in recent years, they still make up pound for pound the largest proportional cost of the vehicle. Now, NIO does something crucial for their bottom line that many other electric vehicle companies are unable to do, and that is offer battery as a service. This was only possible because of, again, their rechargeable, swappable batteries. This is a program NIO has recently rolled out, which lets the consumer rent the battery if they choose while purchasing the actual frame or shell of the vehicle. They still have ownership of the vehicle, yet are simply renting the battery on a monthly basis. If the user chooses to utilize this program, they can save up to 128,000 renminbi, or just under $20,000 USD, off the purchasing price of the vehicle up front. With the national subsidy program on top of that, that's applicable because their batteries are swappable, this can amount up to $23,000 USD. This is drastically lowering the barrier to entry point, widening NIO's market share. Battery as a service and their swappable rechargeable battery model will be huge and revolutionary for this company moving forward. Furthermore, because their business model allows for users to constantly be swapping their batteries, this is going to greatly keep their resale value largely intact. Users aren't weighed down by an ongoing deteriorating battery or an engine, but are rather just reselling the outer shell of the vehicle. This will be a game changer for the company moving forward. Now, there is a growing desire and a fundamental shift in the way people are thinking about electric vehicles and going green and clean. Electric vehicles are predicted to accelerate in terms of deliveries in the coming years, and this revolution is currently taking place in China, and the rest of the world will soon follow suit. China has new targets that 1/5 of all vehicles sold by 2025 will be electric. That is 20% of the market. That would be incredible, as now they're currently only sitting at 5%, and that 5% last year made up about 1.2 million new electric vehicles sold in China alone. This would be a massive increase for the industry at large and help out and pad virtually every single EV company. With growing long-term concerns over the effects of air pollution on the environment and the healthcare system, governments are scrambling to write legislation to promote clean energy, and I do think we will see further incentives in the coming years and decades to turn towards a clean alternative. All right, let's talk about competition. The top dog, the OG, we all know it, it's Tesla. Many analysts believe that Tesla is essentially too large at this point to compete with and to overtake. And although I do indeed think it will be very difficult, if not downright impossible, to catch up to Tesla in terms of market dominance, there is still plenty of market share to go around. Analysts believe Tesla will be able to use its market power to push out electric vehicle companies, appealing to lower brackets of the economy. Tesla has announced its plans to manufacture a $20,000 vehicle, and this puts immense pressure on companies like Xpeng that are appealing to the same market share. In the coming years, I do think non-luxury electric vehicle brands will be in a dogfight with Tesla. In this market, you need to set yourself apart, and I feel as though many companies have not sufficiently done that, and Tesla will be able to gobble up their market share. However, NIO, in my opinion, is leading the pack in terms of its uniqueness and setting itself apart. This company is doing so many things that analysts believed would be impossible. They are positioned in the luxury electric vehicle brand, and they are not contemplating leaving this anytime soon. This is very important as they have built a ton of brand equity and are rapidly increasing their vehicle margins and their gross margins. They have a niche market to themselves, and control over a niche market is incredibly valuable. I think NIO is cutting even further into this market and will be able to seal up some of Tesla's market share, whereas the same cannot be said, in my opinion, of the opposite. Now let's focus on short term. Now, a thing many people aren't aware of is regulatory credits and how well they can pad a company's bottom line. These credits are given to a company when they sell a zero emissions vehicle. If a company doesn't meet their quota as issued by the government, they end up paying hefty fines. Now, companies like Tesla have racked in billions of these regulatory credits because they sell so many vehicles. They've surpassed the bottom line quota that the governments have set. And so they take all these extra credits and then sell them to companies that need them. Many investors don't understand just how valuable these credits are. Tesla has made over $2 billion selling these credits. And because they're given to them, it's virtually 100% profit. Now, other emerging companies who have been recently increasing their deliveries are also doing this, such as NIO. NIO's regulatory credits may be worth about $130 million, and this will come into effect into their Q4. This should pad out their bottom line very nicely and be good for the short term. Look for regulatory credits moving into different quarters, Q1, Q2 of next year. These will just increase in weight. As the world watches China's EV expansion, it is following suit. And NIO is very aware of this and positioning themselves for the coming landscape. NIO currently has plans to expand into and dominate within Europe. They are launching their first NIO house in Copenhagen, Denmark, and plan on delivering over 7,000 vehicles in its first 2 years. A number I actually imagine is quite on the low side. NIO will be taking on Europe on a country-by-country basis, working within different cultures and formulating differing marketing campaigns. Analysts believe that NIO will reach profitability by 2023, and I really do think they are the leader of the pack, at least in terms of emerging Chinese electric vehicle companies. They really are one of my favorite companies out there right now. They're making so many interesting moves, and I am so excited to see what this future holds for them. Make sure to hit that subscribe button. I will be closely following them leading into their NIO Day, which is slated for January 9th, 2021. Anyways, guys, thanks so much for watching. I really do appreciate it. NIO to the moon. What up, long-term gang? 100 videos, I never would have thought. Thank you for the continued support. Smash the like button for the YouTube algorithm. I would really appreciate it. Don't forget about the Webull promo. 4 free stocks worth up to $3,700. All you have to do is sign up, open an account, and deposit in at least $100. It's really a no-brainer. I love Webull. Anyways, I will see you guys all in the next video. Take care, happy trading, cheers.